What's going on, guys? Today we're back. It's already week 9 of what we've been doing this chart analysis. So for today, I think we're going to trim down these videos. They don't need to be 40 minutes long, so I came in a little bit more prepared. I have the stocks that I'm going to buy for my ETF tomorrow, and that's it. And then I'll do some just reflection on some charts that went the right way this week that I was not on the right side of. So first off, we'll start with the ETF. As we know, we use this specific layout, keeping it really simple. So the first chart that we're going to add is Rivian. Let's just go through the criteria, right? Is this green? It's green. Is this green? It's green. All right, we'll throw it on here. So Rivian, I've also seen posts about how it's forming a wedge just in general. So it's like, okay, it fits the criteria. It's still at fair value. Looks solid. I mean, if you think about it, lower high, higher high, higher low, probably higher low. I mean, it's just being consistent, and this thing can run if it gets a hold of something. So might as well give it a shot. Once again, we're above this point of control. I actually really like this setup here on Rivian. So adding this to the ETF, obviously sizing small. Remember, it's 2% of the portfolio per share position. It's very small. United States Antimony Corporation, once again, right above this point of control. Still green, still in a clean, very clean uptrend. And materials have been doing well. I'm already holding multiple material stocks, so the trend's more likely to continue. I might as well, and at the end of the day, the ETF is probability, right? You can totally lose trades, and you will lose trades. I've already lost 3 trades. 2 of them, or 1 of them I should not have lost, but you learn. You learn and you adjust your system if you need to, and then just keep repeating it. Yeah, this fits the criteria. I'll take the risk. I'll take the risk of the probability because I'll size properly and I won't be over leveraged in any stock. Taysha Gene Therapeutics Incorporated at a nice volume level here. It's not the point of control, but it's very close to it. If we can break above this, that'd be nice. It might reject, which is totally possible. It could totally reject from here and drop 35%. Hopefully I'd be out by then, but either way, if I lost 35% on shares, I'd still be fine, right? Because I'm not oversizing. Once again, though, this is an uptrending stock, is it not? I mean, look at this from the past. 30 plus. $30 plus stock. You find a bunch of them that just go to nothing. But right now, it's looking like we're in an uptrend. So, once again, I'll give it a shot. If we lose, nothing. Like, it's fine. Okay, we lost a little bit. It's just worth giving it a shot. Caesars Entertainment, I want to bet on this, bro. Right? It finally looks like it's breaking this downtrend. This stock has been 100 plus, by the way. But very clear bearish structure right here. Right? Lower high, lower high, lower high. We put in this low here, and it looks like we're trying to put in a higher low. So that's what we're betting on, right? We're right above the point of control. We have a little bit of confirmation to the upside, and we have buying pressure. Okay, I will put money on this. Once again, we're not sizing too heavily. It's okay if it doesn't go the right way. I don't even know how to pronounce the name. We're a little late on this one. It's like 3%. I mean, that's not crazy. Unless it gaps up Monday or something, but we'll probably take this as well. Well, we're planning to take all of these tomorrow. This is pretty clearly uptrending and respecting the fair value. Once again, this stock's been 12 plus. So, once again, with market uncertainty, it's a utilities company. It's pretty hard for this just to go nothing. I don't know what happened here. But yeah, if that happens, we'll be out quick. It's trending. Respecting it. Okay. I like the probability. And then we have Prospect Capital. Once again, this one has been in a fat bear trend for a minute. You can see the clear bear trend here, but as we see, it looks like we're getting a higher low right here, right? So continuing this, we're above the point of control, and if we hit, you know, a 20 to 30 cent move, we would already be out half the position. So what my plan is, taking profits, like for example Hudbay. Like if Hudbay has another good week and hits about, have to have a pretty good week, but you know, if it's close to the $27 range, I'll trim half my position, and then I will set my stop loss for sure at break even. I will not, if once I hit these deviation bands, for sure I'm not losing any money on the trade, because I will trim about half of it, because if it wants to continue up, you don't want to be completely out if it hits this level, but you also don't want to get super greedy. So what I'll do, just say, because this trade's going well, it could reverse, could just do this, totally possible, right? It's not out until it's on paper and we have sold the stock. So I am not getting complacent, I'm not celebrating anything until I've sold the stock. But if I do get that first sale in, what I'll do is trim half my position and then keep the rest. Like we could probably hit resistance right here at this $145 million mark. Right here. Don't be surprised if we hit resistance. Hopefully we chop around in a little flag pattern and then continue up, whatever. Or we just reject and lose strength. And then I lose money on it, like whatever. But what I could even do is just set my stop loss at break even if it's kind of moving fine. But yeah, the goal, trim half at this first deviation band, and then set stop loss, break even. So yeah, I guess we can analyze how our charts are looking. Overall, they're all still valid. The one thing, look what we did on Cypher. That blows. So what happened is we sold on weakness down here. Because it looks weak, right? Given this, and then it totally ripped. And it never turned red. And then we just sold Invesco because this is red. The week closed red, so I'm curious, because I don't actually know this yet, if say we find buyers here and then we have a good week next week, does this continue to be, this candle right here, continue to stay red? Or does it flip back green? Because as you see, all of these for 1 month are the same. So I might have to hold until the actual end of the month. But the only downside to that is, like, if you're holding and then it's red, if I waited till the end of the month, I might might have lost like another 15%. Like, so it's either I either got out way too early, or, but it's like, what's the, like, this was a break-even trade. Like, I lost nothing on this basically. So it's either like, it was a break-even trade. Like, you can't even really be mad. But that's the question: how does this thing close actually when April is over? That's my question. Like, because as you see, every 4 weeks actually stays the same. So we'll see. So now I'm gonna switch my layout, because these are the stocks we're adding tomorrow. Same size on all of them. Same strategy. So far we've cut 3 positions. We lost like 20+% on one of them. That was Cypher. And it actually is totally valid now at a 30% week. So that's gonna be the lessons you learn. We also cut Applied Digital. It was just showing weakness. It was red, but now it's red again. But yeah, we probably could have. I don't know. I mean, plus if it's like, dude, if it's even close to becoming red, like, do you really want to just like hold on? Like, no, not really. Like, there's better. I would rather hold the ones that are green. You know what I mean? So if they're giving problems or not really moving, you can just cut them, and then, like, I don't know. I just have to keep iterating. Like, it's not going to be perfect to start, but yeah, okay, new layout. Now I want to go back to some things that I just have observed from the past couple trades that I've taken this week. Specifically options trades, and how I can better approach options in the future. So Nebis. So I'm in a community with traders, and we were notified of a entry on Monday this past week on Nebis. Like, okay, and well, Nebis had a 34% week. Our strike target was 120. Yeah, and if you don't know what that means, what did Nebis close on Friday? 145. We were buying on Monday for $120 strike. Where did the stock end up at the end of the week? 145. You hold that call option, you literally like double your account without risking anywhere near your account size. So, what can we take from this? What can we take from this? How can we learn? Well, let's just think of this. So, okay, Palantir will probably be green tomorrow, like, straight up, bro. Look at that hammer. But, sorry. So, first off, we look at the daily, right? So we were alerted on Monday. Right, so on Monday, we were above the moving averages. Obviously, we didn't have these slopes like this, but, yeah, okay. Bullish on the daily. Then we go to its smaller time frame. Here's when we get our alert, relatively early Monday. So it's just kind of chopped around for a while. Obviously, we made a move here in the morning. And what can you just take away from this week? Right? So because the market was closed last Friday. So we start the week here. We're above the 9 EMA all week. All week we're above the 9. All week we're above the 9 EMA. And very clearly above the 21. Very clearly sloping. This is the hourly chart. So even if we backtest this here, say we go Monday morning. Okay, here's the context. Hourly chart. So now we don't see this move. Right? The MACD's bullish. We're above the moving average. And this, the only thing is time. Like, it's like, okay, we're chopping. Nothing's happening here. Okay, this is market open, new day. Gap down a little bit, but recovered that easily. Strong move today. Ugly candle, I don't like those, but yeah, unavoidable. Gap up. That was Tuesday night. I remember that because I had a call on IREN. Sold it right before close because what I did on Tuesday was I was in Marvel. And then it gapped down the next day based on some news. So I'm like, bro, I have to cut this instantly. Freaking out. And then the next day I applied that trade to the following one. And I can't believe that was already last week. It feels so long ago. Kind of ugly open. Just because we gapped up so much. I mean, even, dude, I'm telling you, you buy around here, you sell at this freaking open. What? You made like 9% on commons, and then you had an option, you made like 400%. It's so much easier said than done, and it's so much easier looking back. It's like so much easier, but looking back helps you to just stay calmer in the future. Like, that's my biggest thing, is staying calmer. We're still respecting all these moving averages, man. Once again, this is just the hourly time frame. And like, if you have diamond hands and you're still holding, look at this. It's just climbing. And then you get this immaculate open on Friday, and you're blessed. And you're like, wow, I'm gonna go buy a Lamborghini because Nebis is paying for it. Nebis bought this, actually. My friend Nebis. Yeah. So the point is what do we have in common with the winning trade? We're above the moving averages. The MACD was fine. Adds confluence. It's not like, oh my gosh, I need to only trade the MACD. No. But we had confluence here. Yeah, it's easier said than done, especially with my account size. Options positions are size heavy relative to the account size. Obviously, I've learned so much about sizing that I wouldn't necessarily want my options to be as heavy as they are, but I can't really do anything about that right now because that's how big my account, like my account is that small. So it's like I have to size heavy. I'm not sizing heavy. Just because that's how expensive like decent contracts are. I can't just be buying the cheapest, furthest out of the money contracts and gambling on 0 DTEs. Like, I can't be doing that. But I can be taking these structural plays and just understanding, like, okay, I need to hold these longer. I'll cut these if we lose structure. Yeah, I'll probably lose more than I want to, especially in proportion to my account, but I have to play the upside of options. And the options account is one little portion. The options account is one little portion of my financial engine. Like we mentioned, we're doing the ETF. I have a Roth that we're building, All those things are untouched from this options money, right? It's totally its own thing, which is amazing. And we just need to continue that. And then when we make money from options, we can build up the other accounts. Build up a little option savings account that I just made. Yeah, and that's the fun part. The fun part about money, about working, bro, is stacking the bread, bro. Is stacking the cash in, the numbers increase. Like, it's my favorite thing to do. I'm telling you, like, anything, bro. I'm trying to build all my bank accounts, all my investment accounts. I'm trying to see the share numbers go up. I'm just trying to grow in my discipline, and and we're getting better. And the amount of painful experiences I've had in the market is a lot. There's a lot. And I haven't even been trading for a year yet. And I've learned some big lessons, especially about position sizing. And yeah, it's just, that's it. And I'm still here after, however many months it's been. It's been about 10 months. Still here, still interested in it, so I'm gonna keep doing it, man. And yeah, the biggest thing is just relaxing during a trade. Like, it's sitting on charts during a trade is actually unproductive. It's completely unproductive. Like, if I hold, like, I got a kind of late entry, but like, bro, what if I bought right here, right? Just that open, a little slow, little gap down here. All right, I like this here. Boom. Like, say even this alert or whatever, right? We don't need to buy right here extended from the moving averages at this alert, because this was extended. So if I bought this, I would have been down, starting to panic at close. I'm like, should I swing this? Like, I don't really like this. And then it's this gap down here in the morning. It's not a bad gap down, but like from close to, you're down, your options more than likely down 40 to 50% right here. Which it's like ridiculous to say, but I'm just, from my experience, my options go down a lot pretty quick. So even just this morning, like, are you able to handle that volatility? Or if you can get that entry, right? If you can get a later entry slightly below or closer to the moving averages in this uptrend, right? Because we can establish here, okay, we're bullish, are we not, right? Here we are, right? We're bullish because, well, we put in a higher low here, right? Higher low. Okay, we're above the moving averages. Remember, trend's more likely to continue. Okay, so now how can I position myself well inside this trend? I need to watch the moving averages. I'd much rather enter down here on Tuesday morning. And you're like, well, what if I miss the upside? What if I miss the upside on Monday? And you're like, if you miss the upside on Monday, you would have had to, enter at least at the bottom, like at, 9:30. Right? Then you could have caught some upside, but still you would have been down here for sure, because theta and the price. So you would have been down right here. So if you enter here later on Tuesday, still valid, right? Looks good. We're above the moving averages. On Tuesday, if you enter at close, you're up. You could sell this easily and be up a lot. But if you gap up overnight because you have a cushion, at open, you're up 14%. And if you hold this all the way till Friday because you have diamond hands, you're up 30% on common shares. And you had a weekly options contract that is like $20 in the money. I'm just saying, like, and I'll show you another trade that just, it's crazy. Okay, next stock, Marvel. Dude, I lost 2 trades on this week. 2 trades on this chart. I'm serious. I lost 2 call options. I lost money on call options on this chart. This chart. A call option. I lost money. It's fucking crazy. No, but what happened Obviously, I can't predict a gap up, but here's what happened. So I entered this one later on Monday. I remember because I was traveling back to Madison this day. I was on the bus. This was Monday. Right here. What day was this? This was last week. This was Monday. So I entered here. I was in close. I was break even into close right here. And then what happened is Marvel had some news that Casey's General Stores entered the S&P 500 instead of Marvel Technology, which is crazy, kind of. Not gonna lie, but whatever. Like, it doesn't matter, right? That was the news. So I'm like coming home, and I see like Marvel gap down 2% after hours, like straight up. I'm like, okay, did something happen? Is there news? Check all the other stocks. I'm like, no way, it's just Marvel. And it was just Marvel. The one time I swing a stock. But, like, obviously it was fine. But, so me, just given position sizing, whatever, I'm like, I have to get out of this at open. I have to get out instantly. So, right at open, sell right away. Okay. Wow, it looked ugly. In the time, felt, but then let's scroll out and see what actually happened. So we gap down on this news, continue to sell off a little bit. Pretty fat drawdown. And what I would say is this would have been an amazing entry to the upside, right? Why? Because we're in an uptrend, right? We are in an uptrend very clearly. We've gapped up this day. The stock has a ton of strength, right? So on Tuesday morning, this is actually a way better opportunity to enter because I entered, intraday. This is extended, right? I understand it. You can't really nail entries every time. Truly. But you don't even have to use the hourly chart. I don't remember exactly when I entered on Tuesday, right? It was Monday I entered. April 6th. Monday I entered. Right, not that much volume, right? Whatever. But you could enter right here. Once you reclaim this, you're like, okay, I like this crossover, whatever. And it's just a little double bottom action type beat. Dude, if you entered down here, holy shit. And the biggest thing about entering on lows instead of highs, dude, you can say your stop loss if you're like, okay, I'm going to invalidate this. What if I enter, I see this wick right here. I see this wick. And I'm like, okay, I like this. My stop loss is right here. Now I can have a tight stop on options. You're like, okay, what about this? Are you going to stop out the second? I'd say, okay, since we're calm, let's do a stop loss that closes below this wick. If it wicks under it again, okay, that's fine. Right? Because I'm not sitting there watching the charts, hopefully. If I'm sitting there on the charts, yeah, I'm going to be tweaking, probably. That's just, I'm just being honest. It's pretty hard to be emotionless when you have risk on the table. And that's what I'm working on. That's why I'm like, okay, I just don't need to watch the charts as much. Obviously, you can't just forget that you have risk on and then it goes to zero. I don't think I'd ever let that happen, but it's possible. But sitting there and then stopping out right here at this wick, that's way worse than just okay, it closed above it looks fine. You could have, dang it. Look at this movement. I mean, even during the day there, you're good on the call option. You don't need to swing it. I'm telling you, buying off lows gives so much cleaner entries. Easier said than done, right? We're way below the moving averages. Is this really what you want to catch? Well, you wicked, right? So that's your bottom that you're relative to. And you're like, well, you wicked below that. I know. You would sell on a closure below. If we had a closed red candle, if it closed down here, okay, you should definitely get out of that. That is not a good stock to be in. But this is insane how much the price moved from here. Dude, remember, I was in this like right here, right? And then I sold right here because it got down in the snooze. And then we rip. Gap up, gap up, gap up. Insane. And then we go back to the daily. Just keep the context in mind, right? Tesla, I took a dumbass trade on this. I fucking what happened was I saw a 15-minute candle dagger to the downside on this chart right here, and I bought a put option, even though a call option would have ripped. I bought a put here. It broke pre-market low, but I did that before I realized that we'd hit this bottom before just recently, and it's actually a support. See, I lost money on that very quickly, and that ended my week. I was like, I'm not trading anymore. But then Dell, same kind of thing here. Not as clean of a chart as not as clean of a chart as Marvel and Nebus, but still. Here's our alert around this time. I wicked out on this candle right here. I'm pretty sure I entered here and I wicked out. Once again though, are we respecting the moving average? Did we ever close below? No. If you are not clearly closing below the MACD, clearly bro. Once again, Dell, you hold it, boom. Gap up overnight. Once again, I can't predict a Tuesday night gap up. Can never just expect that. But what you can do is analyze the situation. Right? Okay, we're above the moving averages. We just hit support here on the 21. We can enter here near the 9 EMA on the hourly chart. Preferably, the best entry I would like is the 21 EMA on the 15-minute chart. You're like, okay, even if we get this entry here around this candle closure, you still get good movement, and then you kind of break even. You're still respecting the moving average. Yeah, you capitalize right here, sell it open, boom. Crazy. Intel, another chart, dude. Bullish as hell. And it just goes to show that expensive stocks just can keep going up. Right? Here we go. Here's an alert. It's, relative to the moving average, sitting fine. It's not super extended. If you can get it near the moving average, that's better, right? So not buying extended charts. You still get a strong close. And if you held in the Friday, you got continuation. And then Palantir was the crown jewel of the week. This is where I entered. So, like, no gap. And I held probably until here. I'm just being straight up with you. Straight up. Because I got notifications like, damn, I'm already up 60%. Like, fuck. Yeah, but listen. You gotta put it in your head. What about 600%? Right? Like, what about 600%? Like, I'm telling you, I got a good entry near the moving averages. And then, dude, this thing bled. Bad. That's why, mean reversion Palantir will more than likely jump up tomorrow. As we checked that chart earlier, it's strong hammer. But, even if I held till here, we catch so much more of a move. And then we catch here. So, yeah, massive blunder. But one trade like this, we were respecting the 9 EMA the entire time. That's how you know it's a very strong trend. It's just a little more patience. A little more patience. I still made good money on this trade. Like, I was super happy with my profits on here. But it's just like, you got to extend your vision past, just small little wins. You got to cover these losses times 10. And then you got to buy some stock with the shares. You got to save a little bit. Like, it's just, we're trying to build real wealth here, right? Other source of strong income, right? So when you hold charts like this, motherfucker, you're going to roll in dough, right? So that's the thing we got to focus on, is holding strong trends. Extremely strong trend. And listen, more opportunities like this will come back, and I'll do better in the future at holding. The biggest thing is zooming out, not watching my P&L perfectly. It's probably going to draw down, relative to the moving averages. If you can enter as close to the moving averages as possible, you're going to have the best trade possible. And I'd rather just miss an entry and miss a trade than chase way above the moving averages. That's the biggest thing. Like, I'm really not trying to chase near the moving averages. Because if you're in an uptrend, the uptrend respects the moving averages. It just does. Downtrend respects the moving averages. If you're just chopping, like, this isn't doing anything, right? Wow. Okay, let's just look back on Palantir and see what happened, right? Wow. Like, oh my gosh, wait. It's almost like this happens frequently. Look, another massive sell-off. Huge gap down, even if you buy here, dude. Look at this. Holy shit. Right? Oh, let's keep going. Okay, range bound. Like, look, you could literally just do this. Here's a range. Oh, we broke below it. Okay, I like this for further downside. Boom. Okay, we're up near it. Boom. Okay, we respect the moving averages. Here's Palantir. Some upside moves. Still down for Hours. It's going down for hours. But still somehow gaps up 5%. If you can just be calm. Not super clean chart line or price action there. Right here. If you can get an entry early. Boom. Wow, look. What are we doing here? We're respecting the moving averages. What are we doing? Respecting the moving average. Anytime price trends, look at this upwards trend on Palantir. Right from bottom to top, even if you enter like right here, 18%. But what do you notice every time? Respecting the moving averages, right? Respecting, because remember, the moving average is just calculated on the close of the candle. So if the close is lower, right, then the moving average is going to be lower. So Yeah, this was like a fucking demon setup, bro. This was a great setup, and I just sold really early, but you win. I did win, but you learn the lesson is opportunity cost. Yeah, that's just how we get better. We reflect, and we go out and get more experience. We have places now where we're going to be putting our money for options. When every trade I win, I'm going to save a little bit of money from that trade, no matter if I'm down on the week, no matter what. Every single time I profit in the stock market, I save a little bit of money. One, to prove that this is real. Two, to prove this is real and prove that like this is another source of income. And it's so worth learning, and it's fun. So I mean, it's fun, and it's a real challenge. But if you keep focusing on how you can be better as a person and your tendencies, these lines on a screen will make you more money than people make in years being engineers. Like, way more. So, much rather learn this and sit in class and just fucking sit there. Even though I do that still, but, I'm not gonna drop out of college to learn this because I can do the both at the same time. But, like, actually, for the past 2 semesters, I spent way more time on charts than school. Straight up. But I think I've done fine in school still, so, and I'll be out of here in like a year, so yeah. So it's more time to learn on the playground, you know what I mean? But you learn through, I hate to say it, but if you want to get into trading, like, you're gonna have to learn every single mistake through pain and loss. Every single mistake. Every single one. You're like, okay, I'm not going to do that. You will do that. That's the thing. Like, I'm not going to size. I'm not going to full port. Listen, I haven't full ported, like, blown up my account, but, like, I've lost a lot of money on one position where you get too emotional to sell because you're like, wow, I have way too much in this. I got to let it ride. Like, nah, don't do that. Yeah, this past week, I missed out on this much downside on a put option. So, like, you live and learn. I'll catch it at some point. I will catch this and make hundreds on that price action. And then I'll save that money, and then it'll compound. Let's go. See you later.